So, Bill, a couple things on the legal front. For years, you and Jim Sinclair and several others have been out front saying precious metals markets are criminally manipulated. And one of the prime time manipulators in that process has been J.P. Morgan Chase. You, Jim, and many others that came forward with this analysis have been...
Were laughed at.
Well, and actually, I would say more than laughed at. I would say you were denigrated. You were labeled conspiracy theorists, that you were wrong, that you were trying to implode the financial system by spreading misinformation. But then there was this headline this week, not on CNBS or in Bloomberg or on Fox Business News. They avoided this. Headline from Zero Hedge: J.P. Morgan Chase gold spoofer admits, quote, manipulating precious metals markets for years. Here's what they say. In what may be the first major bullion bank trader coming clean, a former J.P. Morgan precious metals trader admitted he engaged in a 6-year spoofing scheme that defrauded investors in gold, silver, platinum, and palladium futures contracts. John Edmonds of Brooklyn, New York, pleaded guilty under seal on October 9th, which is just released now, in the District of Connecticut to commodities fraud, conspiracy to commit wire fraud, commodities price manipulation, and spoofing. Bill, you weren't. Jim Sinclair was not. All the others were not conspiracy theorists. In fact, it wasn't conspiracy fact.
Yeah, and he was taught how to do it by superiors, and you have to understand, if he was doing this on his own, he would have been shut, and the firm didn't want it done, he would have been shut down on day 2.
Bill, let's go back.
Now,
go ahead.
A couple other things came up in the gold market this week. We're now back up to 382 paper claims on this on the COMEX. 382 paper claims for every 1 ounce of gold.
Okay, so we have a lot of new listeners, Bill. So there's paper gold and silver, and
right.
There's physical gold and silver, correct?
Right.
Okay, and go ahead.
On the COMEX, there's 382 paper ounces. There's written contracts for 382 ounces for every 1 ounce that COMEX actually has or claims to have in inventory.
So Bill,
that's one thing.
So there are people right now, Bill, saying, wait. That can't be right, because we have regulators like the Commodities Futures Trading Commission, CFTC, and we have other regulators, the SEC, for example, that oversees this kind of thing. And there's no way, in other words, if we're playing musical chairs, there can't be 382 people walking around one chair.
There are. In 2016, the peak was, I think, 508 ounces per 1 real ounce. They brought inventory in, and the amount of open interest declined, so that number dropped, and now it's on its way back up again. It's over 380.
And how can
the Bank of England denied Venezuela getting their gold, and we also found out that the Bank for International Settlements was more active in their gold leasing program than any month so far this year.
So when you add all that up, Bill, on your big radar screen, what is that telling you?
Oh, it's one gigantic manipulation in capital letters.
So it's not just this one guy at J.P. Morgan Chase that's doing this. This is a systemic fraud, systemic criminality.
Right, and when the music stops, I mean, for instance, on COMEX, when the music stops, there's going to be 381 people who think they have gold that find out they have no gold, and there will only be one of the 382 that actually has that 1 ounce.
What makes the music stop?
More than likely, we were talking about that this weekend, more than likely some type of AIG event, and it very well could be GE. I mean, look at General Electric.
Mm-hmm.
If you look at their Zero Hedge did an article this weekend or yesterday. If you even including their goodwill, they have a negative $31 billion net worth.
It's huge. And didn't their bonds become essentially junk in the past several weeks?
They're one notch above junk, I believe. So if they get another downgrade, they're considered junk. And it's important to understand that GE is a huge player in the derivatives market. So if you've got a derivative with GE on the other side and they become junk status, as Jim continually has asked for years and years, what is the value of a contract that cannot perform? And the answer is zero.
Right. And if GE goes belly up, it's very similar to when AIG went belly up in the mortgage industry. Because GE has so many different subsidiaries in, I mean, tell me if I'm wrong, banking, housing, manufacturing, technology, across the board.
Yep.
And we also have a problem, Bill, internationally where, and please tell me if I'm wrong, you're the expert on this, but when I look at the landscape internationally, we have more and more sovereign countries trading in currencies other than the reserve currency of the world, or what has been the United States dollar.
Right. There's trade deals left and right that are being made in non-dollars. The big one this week was the second deal that Saudi Arabia has done to supply oil to China, and that's going to be done in yuan, not dollars.
And that's enormous.
That's huge.
So we have sovereign countries, China, Russia, India, just to name a few, doing deals outside of using the United States dollar, which diminishes the role of the dollar. We also have China, Russia, India. I think Hungary actually just increased its gold supply by tenfold, all buying huge amounts of gold and silver.
Because they see what's coming. And they've not, by the way, for the last, call it 2 to 3 years, they have not been adding to their treasury reserves. If anything, their treasury reserves have been dwindling.
So,
which begs the question, who's buying the treasuries?
Right.
And the answer is it is now outright debt monetization.
In other words, the Federal Reserve is trying to keep the system propped up by buying the bonds of the United States government.
Right, and they're not doing it on their balance sheet because at the same time they're using beards, if you want to call them, in the Cayman Islands to buy treasuries. They're actually outwardly showing that their balance sheet is dropping. It's dropped from, what, 4.4 trillion to, call it 4 trillion. So they're saying that they've offloaded $400 billion of mortgage-backed securities, and at the same time, the U.S. is going $1 trillion in debt each year. So who's buying it?
And so during the campaign, Donald Trump was out there saying the government data is a fraud, the stock market's a bubble, the bond market's a bubble, it's all manipulated by the syndicate. Do you believe he was right or wrong when he was saying that?
Oh, he was 100% correct.
Okay. So then he becomes president, and he essentially assumes ownership of the stock market. Starts touting how the stock market is doing. And then of recent note, in the past 2 weeks, he starts pointing the finger at the Fed, the Federal Reserve, which is an independent group of bankers. It is not part of the executive branch, legislative branch, or judicial branch, and I know you that know that, Bill, inside out. But the vast majority of people in our country are completely unaware of that. And he has been pointing the finger where it needs to be pointed at by saying, quote, I think the Fed has gone crazy, end quote. He goes on, quote, my biggest threat is the Fed. He goes on, every time we do something great, the Fed raises interest rates. Quote, pressed about what he believes is the biggest threat to the U.S. economy, Trump replied, quote, the Fed, end quote. What's Trump telling us by saying this repetitively in public?
Yeah, he sees a crash coming, and he's diverting the blame from him and onto the Fed, and pretty much rightly so, because think about it, the world, not just the U.S., but the world is more leveraged today than any time in human history. And you have interest rates going up. Mm-hmm. That's a problem, because the debt that's existing the debt that existed in the past, as rates were coming down and down and down for years and years, was able to be refinanced and rolled over at a lower coupon. Now what's happening is anybody who has debt, there's no ability to roll it over and refinance, because if you do that, you're doing it at higher rates. So there's no relief valve, in other words.
And in fact, Bill, if we look at the data as it relates to debt, our national debt climbed by $84 billion just by the end of September. And it actually, in the past year, it went up $1.271 trillion to a height of $21.52 trillion. And that doesn't include the missing money, if you will, that Dr. Mark Skidmore and Catherine Austin Fitts have identified, which is another $21 trillion just in the Department of Defense and Department of Housing and Urban Development.
But that's not the important number. The important number is how much interest we're paying on the debt.
Right.
21 trillion or 210 trillion, it wouldn't matter if interest rates were zero, because zero is zero.
Right.
Now we're up to the point where we're paying 550 billion, pushing towards 600, 700 billion per year in debt service. I mean, we're going to be paying more in interest than we pay for the military. The debt service is going to crowd everything out.
It's a debt spiral.
Oh, it absolutely is. And it worked until 2015, 2016, when they zeroed interest rates out. But now that rates are starting to go higher, there's a real cost to the debt.
Bill, how much longer can they keep this Ponzi scheme, is the best way to describe it, Ponzi scheme alive?
Oh, we should have collapsed a couple years, 3 years ago. I mean, your guess.
And the only thing propping it up were lower interest rates.
Correct.
And now interest rates have been escalating, and if you listen to Powell, who's the Federal Reserve chairman, we're going to keep raising them up. We're going to keep raising.
Well, and the interest rates are rising all over the world. As I mentioned, this is a global phenomenon. This is not just a U.S. thing.
So, Bill, when you look at your radar screen, one of the things, as I said in your introduction, you saw things coming ahead in 2006, and you said, I'm not going to stick around to watch this thing implode.
Yep.
So your radar screen has a history of being accurate. So when you look at your radar screen, what are you looking for to to give you an indication that this is an event that's going to occur sooner rather than later?
Well, it's a mathematical event. Yeah, you can watch the news and see who it is that creates the spark. On the one hand, but just from a mathematical standpoint, this is no longer Bill Holter and Dave Janda's opinion. This is a mathematical certainty at this point. We are going to go through a debt implosion, and a lot of people don't understand that the currencies, global currencies, are debt-based currencies. So basically, money is going to lose value. The purchasing power of money.
Bill, we have a question for you from one of our listeners, Mark. Mark, welcome to Operation Freedom. Fire ahead. What's your question to Bill?
Thank you, Dr. Janda. Thank you, Bill, for being on the show today. Gentlemen, as you know, the manipulation of our currency affected by all these aspects is highly suspect here. It could be a provision to take down the country from another aspect. If you deflate the value of our dollar, it's not going to bode well for this country. Also, as you know, we bailed out many big money lenders that were taking in loans upon loans and writing them out, and I feel we're back in that state now. Look at how many people are over credit in this country, and we're lending again and lending and lending and lending. My question to you is, by raising the interest rates through the government to slow down the economy, what type of effect will this have on the economy, and what is their ultimate game plan in improvising this measure?
Thanks, Mark. Bill?
Well, it'll obviously slow economic activity, and when economic activity slows, that means cash flows slow, and when cash flows slow, it makes it tougher to service debt. So, I mean, there's your catalyst to debt imploding, is debt not being serviced. And to answer the last part of your question, I can only believe that it's all part of planned events.
So what do folks do to protect themselves, Bill?
Well, you have to get some assets out of the system, and the system includes banks, it includes your insurance companies, annuities, things like that. It includes your brokers. I mean, if you've got a big stock portfolio with a broker, you should get some of your certificates out and in hand, because when this happens, how are you going to be able to trade your stock? Even if markets are open, how do you trade stock if your broker went bankrupt? And the ultimate way to get assets out of the system is to purchase gold, purchase silver, and either have it in hand or you place it in a private non-bank vault yourself.
Bill, a number of our listeners have contacted me, and they heard your interviews in the past and heeded your advice, and they contacted their brokers and said I would like to I'd like to have my stock certificates, and I would like to invest in some physical gold and silver. And here is what a big chunk of our listeners were told. Well, you don't really need your certificate. We have them. It's okay. We got it. We got you. And number two, as far as physical gold and silver, let's get you involved in owning some. It's owning physical gold and silver. But they're traded on the stock exchange. It's a symbol GLD for gold and a silver for silver SLV. Bill, your take on those recommendations?
Well, the problem with that is your broker never wants to give up assets. That's why.
And the reason is
they get paid on assets.
Right. They're right. Management how much assets are under management is how they get paid their little bonus at the end of the year or end of the quarter.
Exactly.
Okay.
And as far as GLD and SLV, do they really own the gold? Do they really own the silver? If you read the prospectus, they don't even have to own the physical gold or the physical silver.
Well, and in fact,
so that's a liability between you and what you believe to be your gold or your silver.
Right, and
but if you have the coins in hand, there is no one between you and your metal.
Well, and with those funds, Bill, GLD and SLV, who are the people that administrate those those funds?
Right, it's the brokers.
It's the brokers, and for example, doesn't J.P. Morgan Chase oversee SLV?
I think they do GLD.
Or GLD, and then it's one of the other.
Dave, go back to 2010, I believe it was. Morgan Stanley was fined, and they ended up paying like $4 million in fine and paid all their customers back. They were charging customers for the storage of silver that never existed. The silver was never bought. So if the system came down and you're thinking, oh, well, I got silver. No, you didn't have silver, but you were paying for it. You paid for the silver, you were paying to store the silver, but the silver never existed.
You know, Bill, of late, the IMF, the BIS, Bank of International Settlements, what some of my friends call the Brussels Mafia, have come out to warn people, quote, this from the IMF, the world economy is at risk of another financial meltdown. This is from the IMF. The failure of governments and regulators to push through all the reforms needed to protect the system from reckless behavior. The global debt levels well above those at the time of the last crash in 2008. The risk remains that unregulated parts of the financial system could trigger a global panic. This is what the IMF said. Bill,
well, Dave,
the IMF...
when it's all over,
yeah.
You're just going to say, we warned you.
Right.
We warned you ahead of time.
That's what the globalists do, right? In their warped world, they manipulate the system, they crash the system, they give you some little warnings ahead of time so they can say, well, we told you, but you didn't listen. And we had several instances of that last year, and you and I have spoken about this, but it bears repeating.